Hey friends, Stacey Gardner here, one of the owners of Open Door Coaches. I just wanted to take some time to talk with you today about the importance of chart of accounts and why we have them. So basic chart of accounts, right? We're going to have your different sections. We're going to start with your profit and loss, right? You're going to have your income, your cost of goods sold, your expenses, your balance sheet. You're going to have your assets, your liabilities, and your equity, right? Underneath those sections, they're going to be individualized out, right? And so let's take expenses. Your expenses, you may have auto expense, advertising and marketing, outside services, right? You're breaking out all of the different types of expenses, right? Those are your chart of accounts. Your income, if you have different income coming in, it may be helpful to break that out. And here is why. So a lot of times owners, they end up really just doing the bookkeeping for tax prep, right? Which, friends, that is such a, gosh, there's a lot of information that's just getting wasted if that's all you're doing is doing the bookkeeping so that you can prepare your return at the end of the year, right? You want to be doing your bookkeeping so you can do some projections, right? Make some great financial decisions using this information. A profit and loss broken out by month can be so valuable. One, knowing where your money is going. And then two, what income do you really have coming in? And so by breaking these out into those individual sections, as I sit down and I meet with clients and we look over profit and loss by month, again, we're looking at their gross sales. I want to see if they have separate income. I want to know where the income is coming from, right? So I always recommend break out that income into some different sections, because sometimes some of our clients think, gosh, this income stream that's coming in, this is my main source of revenue, when really it's not. They're actually getting majority of their revenue from something else, right? So then maybe does it make sense? Do they need to switch the focus? Or are they not making enough in that area that they thought that they need to go back in and troubleshoot, figure out why they're not making the income that they thought they were? Then we come down into our cost of goods sold, right? These are the costs of whatever it is that we're trying to sell or a service, right? These are not overhead costs. Overhead costs are all get classified under expenses. So for one, we want to know how much, say you're making a product, right? All the raw materials for this product, that's where that's going to go. How much does it really cost for us to make this product? And then what really does that account to our profit margins, right? Then we come in and we look at our overhead. And so as I'm looking at this for clients, I'm going down and I'm running some numbers, right? I'm looking to make sure, is their payroll under 50%? Depending on what they're doing, payroll's fine being at the 50% if it's a service heavy industry. Sometimes that payroll, it maybe only needs to be 20 or 25% if there's really not a whole lot of service that's within that. So understanding really where that money is going, looking at the marketing budget, right? What's your return on that? Are you spending $5,000 in marketing funds and you're really not benefiting any from that? And what's your criteria for measuring that? And so again, if you are just bookkeeping to run that tax prep at the end of the year, you are really missing out on valuable information. At Open Door Coaches, we would love to help you with this. We'd love to sit down. We'd love to look at your profit and loss with you and just walk you through some of this and really help you unleash your business so it can reach its full potential. Thanks so much, friends.